Good morning, trading world. It is November 1st, 2022, and this is my pre-market outlook and technical analysis for trading the markets. It's the first of the month. Gap up, gap up, gap up. My twist on Bone Thugs and Harmony for the trading day. Yesterday, when we looked ahead at the important dates for this week, I spoke about the first, not because of a significant news report, but because of new fund flows and how the release of all that new retirement withholding could continue to hold the market up. I expect a continued rise into the morning of the FOMC announcement, maybe not straight up, but getting us up into the 390s. The channel and target on my weekly chart, let me bring that up. As you can see on the weekly, I have a channel drawn, which has kind of been a pretty good indicator of where we're going. So we have kind of a target that upside of the channel is going to be right around that 400 area, with a lot of other resistance kind of intersecting in that same place. We could kind of hang around up here a bit, or preferably at the announcement or FOMC announcement, we get a strong pullback off of this channel. So that's what I'm looking for. That channel and target on my weekly chart, it's telling me somewhere between 394 and 400 on the SPY. Now, today marks a new month, so let's look at the outlooks. The outlook for November is bullish, closing above the 386.21 with a retracement that has us going back down towards the 369 area. Now, the weekly outlook is bearish as well. Is bearish, closing below 389.02, looking for a retracement of or back down to 379 area. If you're looking for that swing short like I am, continue to exercise patience and wait for the mid to upper 390s. I will also start to look at some out of the money VIX bull call spreads around the 20 to 23 level, but give yourself plenty of time on those. From here, let's take a look at the key levels to watch for today. All right, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at 390 to the 391 area. Then we have our queen resistance, 392 to the 393 area. And then our king resistance, 394 to the 397 area. And that is the ultimate objective or goal or target for me during the week for a swing short. On the support side, we have our jack support at 388 to the 387 area. Queen support 386 to the 385 area, and king support 384 to the 380 area. Just as a reminder, usually the new fund flows last about 3 days. So this money coming in, buying the dips again, lasts about 3 days from the 1st to the 3rd. Which is going to be kind of crazy because the FOMC meet is on the 3rd. Or let me take a look at that. Is that, I don't know. the FOMC is on the 2nd. So that's what makes this even crazier, because usually that new fund flows last about 3 days. It's usually dying out about that 3rd day. This is going to be real interesting, whether we can get a real pop up the morning of the FOMC meet and then a huge drop after the FOMC meet going into Thursday. And even if we drop going into Thursday, overnight, Wednesday, Thursday, I would still look for maybe a decent rally on Friday. We could have either that strong straight up rally, or we could have a rally coming off of lows that gets us back to a resistance, and we kind of have that midday drop out in the rally, and then kind of find support and take it back up. But Friday is going to be suspect. Let's get back to the levels, or actually the thesis for today. The main thesis is bearish, closing below the 386.21 with a projected target low of between 386 and 381. The alternate, more explosive thesis is bullish, closing above the 386.21 with a projected target high of between 387 and 394. The current major channel we are in is 379 all the way up to 397. The major channel below is 379 down to 364. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish, making this a bigger case for the more explosive alternate thesis. Due to those new fund flows setting a fire to the market, you have a lot of people, I've used this analogy before, you have a lot of people stacked to one side of the boat, and this is that big scare that gets that boat to lurch to one side, and people, make that move, and the boat is turned over, and people are jumping off of those, short positions, and we start taking off higher and higher. So that's what I'm looking at today. And again, I just kind of explained this, the injection of new fund flows, we have a greater chance for the more explosive alternate thesis, but be careful, because most of the run for today may already be done in the overnight session. Let's get to the scenarios of the day. All right, here we are with our first and most probable scenario, which is going to be our trend day up. We open gap up and start with a fade back toward the previous close, represented by the blue line. We find support on or before the previous close, then begin the uptrend for the day. We find midday chop around either the possible queen or king resistance area. I will say again, because of the strength of the overnight session, most of this trend day may have been done overnight, so we may not see much more rise, if you will, on the day when it comes to this trend day type structure. All right. Our second scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around either that queen or king resistance before going back down with the same energy or force we went up with the first part of the day. On the rounded reversal day type structure, I do like to point out the vice versa alert. And the vice versa alert is the exact opposite scenario where we could get a continued push lower from the cash open, find midday chop around either the jack or queen support area, and then find our way back up with the same force or energy we came down with the first part of the day. So that is our rounded reversal day type structure. All right, our last scenario is going to be our expanded range day structure. We could have an initial drop lower, find support, and chop back and forth lower before getting a midday fade and still trying to start the comeback later in the day. So the key thing to focus on any of the range day structures is the previous close, because it often means we get a close both above and below that previous day's close. And your Bollinger Bands, your deviation channels, these are all good things to kind of have in place for these range day type sessions. So with that being said, as always, your most important job as a trader is to protect the capital that you already have. We do that by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I'd like to end today's video by wishing you a positive trading day. Let's go out and make it a great one.